Welcome back to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm really pleased to have Chen Lin with me once again. Chen is a good friend of mine. Met him a number of years ago, quite a few years ago, actually more than a decade ago, and learned to know him. He is a very successful investor. He works really hard, but he thinks he's a unique thinker. He does his own work. He doesn't sit around and wait for other people to tell him what to do. But he has been so successful, and he does provide his information to investors who are willing to pay the fees for his service, which are, well, they're not out of this world, but you need a portfolio that is significant enough to justify, but really very reasonably priced given the quality of information that Chen provides. Chen, thanks so much for coming on with me again today.
Thank you, Jay. Pleasure to be here again.
Pleasure to be here, and it's also a pleasure to tell people to subscribe to your letter. They should go to chenpicks.com, Chen, C-H-E-N, picks.com. Chen, let's cut right to the chase. What is your outlook for the equity markets this year, 2019?
I'm quite concerned about the equity market as we saw the rapid decline in the last quarter, in the last 3 months. Now we're having a rebound. So basically, usually at least they will go down to retest the low. And there's a lot of margin debt. If you look at the big picture, the margin debt is still very high, and the leverage in the system is still very high. So one day, if things go down, can go down very, very hard. So I'm not here to predict when it will happen because it's very hard to time it. It's more about confidence and also about a lot of factors, the trade deal, the Fed action, so on and so forth, and even the government, right? So,
right.
2020 election also another factor. So there's so many factors, very hard to time it. My point is I'm looking for opportunities in the market and trying to profit from it, and then hopefully my subscriber will profit from it as well.
Well, every day, of course, things change, and so I know that you're factoring like I think you have one of the most remarkable computer brains that of anybody I've learned to know. I don't know how you can take in so many factors, Chen, and know what to do and be as successful as you have been. How do you quantify? I mean, I'm not asking you to answer this because I don't think you can, but somehow you see the world as it is. You have all these inputs. And your mind is working all the time in assessing the markets and where you want to put your money next and where you should be and shouldn't be. You are not this kind of ideologue or the kind of person that I am. I am really a gold bug. I have certain views about the way the world should be. Then a lot of times I try to believe that the world is the way I would like it to be and think it should be. And that isn't the best way to be. You are much more open-minded about things. So I was quite surprised in your 2019 outlook that you sent to your subscribers. You stated, and I quote, "There is only one trade here, buy gold." Now, I was a little surprised to hear you say that because I know you make money in the biotech sector and the energy sector. As you just said, you're looking at markets. You're always looking at constantly changing environments for the markets that you're always looking for new opportunities. But why are you so strong about gold? Why are you so positive about gold? At least you were when you wrote your 2019 outlook a few days ago.
Oh, thank you, Jay. Actually, that was quoted my letter in the beginning of December. So actually, that was like the darkest moment of the market. At that time, gold was trading about $100 lower.
Okay.
So the setup on that was the trade war between U.S. and China actually getting much worse. So my calculation at that time was if the trade war really breaks out, right, the United States, China will be weakened dramatically, right? U.S. also going to be weakened. So my calculation is 3-to-1. So it hurt China 3 times, hurt the U.S. 1 time. So then both countries will be hurt. Economy will going down. And the beneficial actually will be a country like Vietnam, like Mexico, even EU and Japan because they can benefit from the trade war. And so the one conclusion I draw would be that the dollar will be weakened. Right, at that time, remember, at the beginning of December, dollar was rising sharply. So dollar will be weakened, economic will going down, which means the Fed will stop raising interest rate, right, or almost stop. So that's my conclusion, and I will just tell subscribers that's actually almost exactly 1 month ago. Buy gold. That was the only trade because market is coming down. It's time to buy. I even put in my newsletter, I was watching my son's basketball game. I just used my cell phone to buy. I bought as much as gold, future as possible. So, what's good trade? Look back, it's up a lot. Also bought a lot of stocks and core options and so on and so forth, all up a lot. Right now, actually, gold is hitting a resistance, 1,300. So my expectation is we should get over the 1,300, okay? With, and then if that's over, the next stop important will be 1,375 to 1,400. If gold is really over that range, actually it's about 1,800 Canadian dollar, you can see the gold really breaks out, okay? Breaks out. That's a very, very significant uptrend. So there's a lot of factor moving. There's a lot of factor I mentioned in my newsletter. The scenario always play devil's advocate. What scenario that gold may not shine as we hope? One of this could be, that somehow, it's actually right now looks likely they have a very good trade deal with China and U.S. by the end of the deadline, which is end of February. They reach a deal. Somehow economy looks good, and then the Fed raise interest again in March. Is it possible? Probably possible. It's possible, but a very low chance. But that's the thing we need to guard against, right? So because from trading, from investment point of view, we're up so much in the past months. I just hate to give back my profit. That's the thing I'm looking. But other than that, if we get to March, and the Fed probably will wait and see, and then that's actually we will have a green light. Right now probably gold is hitting a resistance, and then we try to consolidate around here.
All right. So, do you think that Chairman Powell has capitulated a little bit here? With the equity markets so weak, obviously there's some things that have happened, transpired. The Fed remarks that have come out seem to suggest that maybe Chairman Powell will back away from raising interest rates here, and in fact, they were predicting 3 rate rises, and now it's 2. Or do you expect even fewer than that this year?
I expect probably 0. Okay, but
0.
It depend on many factors. Right? As I said, depend on the economic data, depend on these other, and then China is printing money like crazy. So would that really help the economy or not? There's a lot of things to see. I guess it's just you have to wait, to see when we're getting close to March. But my view is they probably won't raise interest rate in March, and that's it. That's it for the year.
Okay. Well, we'll have to see if that's the way it is. It should be bullish, but who knows for sure? Nobody knows for sure, Chen. But you certainly. And again, if we were to talk to you next week, you'd probably have some more variables that you're watching, some different ones. So it is very dynamic.
There's many variables. So my point is, the point I put in my New Year outlook, which I put out in early December, was that if the trade war, the best trade against the trade war is gold. There's only one trade there because there's so many factors. And plus, we just learned China's central bank just bought gold first time in 2 years, right, in December. So that's another factor because last time China bought 25 million ounces of gold in 2 years, right? So now if they start buying, this is a new trend. They only bought like a little bit over 250,000 ounces of gold. So that's a lot to go, a lot of gold to buy. So that's another factor to consider, right? So that, I need to watch it if it's a trend. I think it probably is a trend.
Of course, whether China is buying real physical gold, and we know that the price of gold isn't necessarily governed only by the physical movements of gold. It has more to do with the banks buying and selling in the futures markets. But anyway, I want to ask you about energy, Chen. What do you see for the energy markets in 2019? Oil's gotten hit pretty hard in 2018.
Right. Oil got hit pretty hard. This go with the world economy. So far, in the past few years, every year the oil demand increased by 1 million barrel a day, right? So it depends on your point of view of economy. I think oil probably on the low side than on the high side. Okay, and the oil no longer controlled by the OPEC. It's more controlled by the fracking in the United States. Right now, it's almost 8 million barrel per day. So basically, if you stop fracking, you continue drilling, the oil will drop dramatically. So the dynamic of oil is very different than 10 years ago.
Right.
So there is, and then U.S. is growing like almost a million barrel a day. So take out all these excess demand around the world. So what if the demand getting weakened, right? So that's the question, but I think it's probably on the low side and the high side. My philosophy, I put it on my letter in past 3 years, is like, forget about high oil price because of fracking revolution. Let's invest in something slightly different. I'm looking at the natural gas, not natural gas in the U.S. or Canada, where fracking is dominating. Let's look at the fracking outside U.S. And Canada. So I have investment in natural gas in Colombia. I have a very exciting one in Turkey, right? That it could be the first major fracking discovery in the Europe continent. Okay, that's the Valera and Transatlantic, and then also have in Indonesia. That's also gas and oil. That's Pan-Orient. So, and also another natural gas is in Ukraine, another place with very high natural gas price. Why I invest in natural gas? Because natural gas costs about $4 MCF to ship, the liquid natural gas to ship. So that maintain a local, very stable floor of the natural gas price, which is at least $5 per MCF outside the U.S., where the in demand, and most places right now is 7 to 9 MCF. That should make a very high margin for natural gas player.
All right,
so
Chen, we're just about out of time. What about biotechs? Because you've done so well in biotechs, they were very strong for you during the first 3 quarters of 2018, but you had a tougher fourth quarter. Do you have some special biotech stocks you've got your eyes on as we head into this year?
Oh, yes, exactly. As I mentioned, I was looking for biotech to rebound into the JP Morgan conference, which is going on right now. It did rebound. So I kind of reshuffle mine, and I have some very near-term catalysts. One is Adara, one is Quotient. I mean, so those have a very near-term catalyst coming in the next weeks, even a few even days. So I'm looking for that, and hopefully, the catalyst will come in as we hoped, and then we can ride from there. So that's what I'm looking, because the market risk is getting high. So actually, I bought it and late last year, and I kind of when the rebound kind of lighting up some, but focus on company with very good near-term catalyst.
Excellent. All right. I guess we'll have to leave it go at that. You want to mention one name in the among the gold and silver stocks? What would be one of your top picks there?
Oh, I'm very excited about Pretium. There is an article just this week said Barrick is looking to buy a Canadian a single mine project or a single project, and then I asked, is that Pretium? And it is a maybe. So actually fit Barrick pretty well, because Barrick has a headquarters in Canada, has no mining in Canada, so they have an expense. At least you want to have a profit, so to pay less tax. So looks good fit to Barrick, and hopefully it will be taken out in the next few months, just like the other miners I have. The Tahoe got taken out.
Right, exactly. Well, thank you, Chen. We're out of time. We'll have to have you back and get some more of your stock picks in the near future. Thanks so much for being with us today, and look to do it again in the near future.
Thank you, Jay.